Good afternoon, Premium Gang. How's everybody doing? Hopefully you guys are having a great day. I've been a little bit busy today. I was trying to take some trades earlier and then had some family things come up that I had to take care of. And got a little distracted at that time, so I didn't take as many trades. Then I went for my walk. And now we are doing our live stream. So we'll cover scalping again today, and we'll talk a little bit about some of the questions that Kelsey and Grayson and I have been discussing in the room, which is rules and knowing when to take profit or when to let something run. And we'll discuss all of that today. Okay. I've got your comments there up on my phone. Hey, Yusuf. Good to see you. It says there's a couple of you guys in here already. And we can see sort of the action on ES right now. Let me get in a little bit closer here. Okay, so here's our first candle of the day. Obviously, you can tell that because you can see where my purple dashed line is. So our first candle of the day, if you guys remember, even though it ended up green, it was really choppy. It was really choppy. I'm trying to remember. I think it went up first, and then it went down, and then it went up, and then it went down. And even when it was up here, it was pulling back, and it eventually ended up green. Then the next candle, it just absolutely flushed right down to the 20. Okay, but it caught support there. And why did it catch support? Well, let's take a look. Okay, it caught support not only because of the 20, but because the 20 was also in confluence with this structure right here. See this pivot? Okay, so we were talking about structure the other day. I can't remember who asked. It's irrelevant now. Okay, but structure, market structure, is when you have a higher high, lower low, or higher low, so on and so forth. Okay, this is market structure. So this structure, this pullback and then spike up, creates a pivot. And if you look, it was right in confluence with the 20. And that's also happened to be right where this candle bounced. So at one time, this was a huge red candle, right? And if it would have broke here, look at this. Look at this lineup over here. And then down. Okay, so if this would have broke, realistically, we could have ended up clear down in here. Down in here. All right? We talk about, price action all the time. I've taught you guys repeatedly, and I'll just continue to teach you as we go along. But this right here, if price ever makes it down to it, that's a recipe for a steep drop, right? Why? Because if you get under here, you'd be taking this out, which would pop you down and probably take this out, and then you get down here. Now this one might be a little bit tougher only because it's a pivot. See this? All right, but if it clears that, there's a very good chance you get down somewhere around here. Now you do have this level here to contend with, but that's still a ways off, or at least could be, right? Right now, price has been going negative for 1, 2, 3, 4, now 5 candles. This candle's just starting, so obviously it could start to bounce up. But if it takes this out, then we got that magical test of the 20 again. So far today, 1, 2, 3 times it held, and that's what led to our J-hook pattern. Okay, I called it out in the room. I said the key would be if we got below here, right, then we'd be looking at a drop, or if we held again, we would be looking at a J-hook. And that's exactly what we got. See, because it looks like a J. Now, it didn't, I shouldn't say, how should I say? I guess I wasn't surprised that right here is where price caught resistance and has started moving back down. And I'll show you exactly why. Give me 1 second here. Let me squeeze this in. Okay, now first of all, this was the level that gave us trouble this morning. This is where we double topped yesterday. You see this? Follow my cursor across. Do you see the line that my cursor makes, the crosshairs? Okay, you see where we came up and then rejected back down this morning. Was at the same place we double topped yesterday. Well, then the next area that we needed to get through was right here, which we did actually rather easily. We did get through there rather easily. But then we come over here. Let me see if I can squeeze it in a little bit more. Got to come over here. Okay, and then look right here. This is 28.95. This is where we rejected. Do you see why? See this strong move away. We had a big candle. Now, actually, if I scroll in, it'll make the candles better size. See this? We had this, not only did we have a big red candle, we came up, we rejected off the 20, we started back down, and then we just flushed away. We had a big red candle, then a gap, then another pretty decent sized red candle, all from this level at 28.95. So in my eyes, it wasn't a surprise if we go back across that that's where we rejected today. Okay, I saw some people that were calling out, oh, if we get over, 28, I think somebody said 28.97. If we get over 28.97, oh my gosh, we're going to the moon. We're going to the moon. Excuse me, 28.87. 28.87 is what they were saying, which is right here. So basically they were saying if we got over this wick, they're like, oh man, we're going to the moon. I saw people calling out 3,000. I saw some people saying this is the beginning of all-time highs within the next couple of days or whatever. And then we did get this nice burst, this candle right here. Then we formed a doji rejecting right off of 28.95, and now we've been moving down. Now, we still have the 20, right? Still have the 20 right here, which it could come down and bounce off of there. It could, it could catch a little support right here in this wick. Okay, so far, that's where this candle caught support, and so far this candle has caught support. All right, so it's got to get through here. Then this is the real test because it's been support already, major support. And why would I say major support? Well, let's just look. Again, remember, this was a huge red candle. Power, right? Freight train coming right at you, and it sent it right back the other direction. Then it came over here, and it tried to go higher. The bears came in again, pushed it back down again, stopped it again. Then over here, okay, it came up, comes over, tried to go lower, and then it exploded from there up to this area right here of resistance at 28.95 that we just talked about. Okay, so that's why I'm saying this is the key. I've been saying it all morning. This is the key. If price breaks and holds the 20, we might start to see some weakness in the market. Okay, could have happened here, could happen up here, or we may come back down and we might bounce off of it again. Don't know, right? Don't know. And I'm not in the prediction business. I try to anticipate or forecast things that I think, based on price action. That's why I was able to say that we were either going to flush through, or if we caught support, J-hook. Okay, because right there it is. I called it when it was right here. If you guys remember, I called it when it was right here. I said if we catch support on the 20 again, we could J-hook. And that's exactly what happened. Now we're watching it right now, and I'm gonna talk a little bit more about scalping today. See, we got somebody else who joined us. I don't know who it is, but welcome. I'll talk a little bit more about scalping today. We talked about it yesterday. I'll go through some various charts and just kind of show you some areas where great scalps would have been. And I haven't even looked at anything. We'll just pick stuff out at random and look. I'll also show you how you can go to different time frames. So I can scalp off of anything. You know, yesterday, all those scalps I took were on the 30-minute chart. Monday, those were all off a 2-minute chart. You can scalp off of a 15, you can scalp off of a 5, you can whatever. Okay, whatever you feel comfortable with and wherever you find the setups that your eye can easily identify. Right? Setups, triggers, price targets. Those are the most important things. Okay, but before we do that, I just want to talk a little bit about what Kelsey was asking and Grayson and I were chatting with her on. And if Kelsey's not on here, she will watch this. She watches every one of them. So when it comes to knowing when to exit a trade, I think it was yesterday, I put in the room about how some people say that trading is both an art and a science. And I say I somewhat agree with that. There are some things that are black and white, but a lot of it comes down to your feel, kind of being able to gauge what you see on a chart, know when momentum is now slowing down and going to possibly go the opposite way, go against you, things like that. So there are a lot of people who would love to just say, okay, now your stop should be set in stone, right? You should not be moving your stops. So if you say that your stop is 10%, or it's $50, or it's whatever it is, it's a certain percentage of your account, whatever that is, that you stick to. Now, when it comes to taking profits, I'm just going to make something up. Let's just say that we were using this as a trigger up here, okay? And our entry would have been right here below the doji. And let's say that our take profit target, maybe we're going to say it was the 20. Okay, maybe we're going to say it was the 20. So from here, that's 88.50 down to here. That's 82 really. So that's a $6.50 move. I know that I would be in profit on that. There's no question. Okay. What would I be in profit? It depends, because it always depends on how quickly the move happens if you're playing options. Now, if you're playing standard lots, it's just by tick, right? It's $12.50 per tick. It's $12.50 per tick on options as well, but options can accelerate. So the quicker the move, sometimes you can actually make more. Okay? You'll make more. Or if it goes against you in a hurry, you can obviously lose more too. So you got to keep that in mind. But anyway, let's say that this was my take profit target, and we get to this level. Okay, I'm $6.50 in profit, and now price just starts to waffle here, back and forth, back and forth. Okay, and it does that for several minutes. Okay, there's a couple things I can do. I can go to time and sales. Okay, I can go over here. I can see what kind of orders are being placed. Right? What kind of orders are being placed? Let's say, what did we say price was down here? 28.82. Okay, just ignore these prices right now. Let's say that you start to see this go green, okay, which means people are buying, right? They're buying. And you see big numbers, and then this number starts to increase. So it goes from 28.82 to 28.83 to 28.84. Okay, price is starting to go against you. Get out, right? Get out. Take your profit and get out. Okay, that's one thing. So I wouldn't have made my price target, my take profit target, but I would exit because I don't want it to go against me. All right, so a lot of times what happens is it comes back $1 or so, and people are like, yeah, well, okay, I feel pretty good, and it's kind of going back and forth. Well, then it goes back $2 on you, and it's going back and forth, then it goes back $3 on you. Well, pretty soon, especially if you're playing options, your profit will be gone. You lose profit quicker, right, when you're playing options. Now, if you're playing a standard lot, it's just whatever the ticks are that you've lost. But I'm just going to make something up. Let's say I entered up here, and at this point, I'm just making this up. At this point, I was $75 in profit. So from here to here, I was $75 in profit. But then let's say it goes against me to right here. Okay, I'm still, $2.50, $3 below where I entered, but I'll almost guarantee you I would either be just slightly in profit or break even, because you lose profit quicker on options. So when it starts to go against you here, you start to lose profit quicker. So I might go from being up 75 to right here, maybe I'm only up 12.50. Okay, maybe I'm even already break even. And you would be saying, well, but I'm still up. I'm up $2 or $3. Yep. Okay, there's give and take. Everything in the market, you'll hear this a lot. There's always give and take. So because options can accelerate quicker than playing standard lots, it also goes against you quicker. So if it's moving your way and it's moving your way quickly, you can make more money with options. But if it starts to back up against you, you're going to lose money faster. And we've already talked about this. If it goes your way, but it just goes your way really, really slow, really, really slow, it may go your direction and you may just stay at break even or just barely make any profit. Or, now today's not an expiry day, okay? So premiums aren't burning off as fast today. But remember, yesterday was an expiry day, and remember what happened to me on the live stream. Where I entered, price had moved my direction quite a bit, and then it sort of stalled out. And even though it went my way, I was losing money. I was down like $100 because the premium was burning off so fast. So in that case, obviously time is always against you when you're playing options. It's always against you, but it's really against you on an expiry day. Just keep that in mind. All right. So then her next question was, what if you get to your price target and price is still going your way? Do you just automatically take the profit? For me, that's where the art or the feel comes in. Okay, so let's take the same scenario. Just ignore these candles right now. I enter right here. My take profit target, we'll say my T1 is the 20. So I don't care if it's this candle or this candle or this candle. I get there. All right, it's going to depend on what happens when I get there. Do we get there and then does price start to waffle? If it does, I'm out. I'm out. I'm not waiting around because I don't want this to happen right here. I don't want price to come down, hit my target, and bounce back against me. I guarantee you, here, I'd be losing money. I wouldn't just be break even. If you took this big of a bounce against you, you'd be going negative. And I remember when this happened this morning, this bounce happened pretty quickly. All right, so if I get here and price starts to waffle, I just exit. Right there, take my profit. But let's say this candle looks like this, except red, big red candle, and it just goes right through it. Like a hot knife through butter, just slices right through it, no hesitation whatsoever, just keeps on going. I'm going to keep going. I'm going to ride it until I start to see it. Maybe it's here, right? Maybe it's at the bottom of this candle. I'm going to ride it until I see that price starting to waffle, until I see that price starting to vacillate up and down. And then I could look at time and sales if I want. I could pull that up. You can look at the level 2 if you're into that kind of thing. Okay, you can look at the level 2 because it's going to show you, the level 2 is showing you what is available to buy or sell. Right? And then time and sales is showing you the actual orders. These are orders that are being placed. These have already happened. in real time. You're getting to see them in real time and their size, and that's important. Hey, Stacy, good to see you. Okay, so again, that's how I know. That's how I make that determination. So if it blows right through my target, no hesitation, slices right through it, I'm going to ride it. Okay? Then if it hesitates here, then that's might be where I exit. If it hesitates here, that's where I'm going to exit. But if it keeps going, right? If it keeps going, I'll keep riding it until there is a point where you've got to start thinking in your head, okay, I might be getting up against exhaustion here. Right? Let's just look. Let's just go back and look, and let's look for the biggest candles we can find. Okay, here's one, right? Here's one. Let's see if we find anything bigger. Okay, there's one to the upside. Here's one that's a little bit bigger. Okay, here's one. All right, now here's exactly what I was looking for. Okay, you see this big candle. Look what happened on the very next candle. I'll guarantee you in real time, this shot up to here and then bounced off the 20 before going higher and moving up. So when you see when you're involved in a candle like this, let's just say it's sliced right through the 20. That wouldn't have been my take profit target. Obviously, you got these big wicks over here. But let's just say this was your sake of argument. This was your take profit target. Slices right through it, still going lower, still going lower. Well, now I see we're coming up on a potential support level. And this candle is really big. This would be the biggest candle on the screen by far. Now I'm starting to think about exhaustion. Now I'm getting a little bit worried. So as I near this, I would probably exit, because I would have already made quite a bit of money on that. On this drop, okay, let's just, again, this wouldn't have been an entry point for me, but let's just say you entered right there. Even down in here, you would have made really good money, okay? So what if you get out here and it keeps going? So what? You can't have FOMO in this business. You can't have it, all right? Because if you have FOMO and you try to hold on for every little last penny, this is what happens. I guarantee you, if this happened and it went against you, probably would have wiped out almost every bit of your profit. Because if you would have entered here, right, and then it came down and bounced and came back up in here, anywhere up in here, you probably would have already lost all your profit. And you probably, again, this is not a trade I would have took right there, but let's say that was your entry. Just down here, let's look at it. 52 to 34, that's $18. So let's say you even caught $15 of that move, right? You'd be sitting pretty. You'd have a lot of profit, and then you get this bounce and it come back against you, just wipe it all out if you're playing options. Okay? So that's how I make the determination. Let me get back over here. Whoops. Oh, look, we're testing the 20 right now. You guys see this? We're testing it. We're going red. If we break and hold, okay, we could start to see some weakness in the market. Let's see what happens here. Okay, now it's down here. It's testing this level. Next thing would be opening price level. Then here, this wick, the very bottom of it would probably be resistance, but if it makes it down to here, these would be an accelerant, right? Small wicks lined up in a diagonal fashion, these would accelerate price. This could potentially be an obstacle. Now, right now, it's bouncing. Okay, we're going to see what happens. Right now, it's catching a little bounce here off of support. All right, so we still haven't broke and held, right? You always hear me say that, break and hold or clear and hold. We need to break and hold this 20 to see more continued downside. Does that make sense to everyone? We'll watch it for just a second. I wanted to just check something. All right. All right. I mean, the market feels heavy to me. And the only reason I say that, let me come back over here. Okay, look at this run we've had, right? Look at this run. Okay, so let's just say that from here to here, that's the origin of the move, okay, to where we turn back around. What do? We try to find the 33 and the 50 and the 66%. So 28.95, I'm just keep the math easy here. 23 to 28.95. So even say it was 25, that'd be 70, it'd be 35 and add basically 2. So let's just say $36. So subtract $36 from 28.95. $36, 28.95 minus 36 be 28.59. So basically this level, it's slightly below. This would be your 50% of this entire move up. Okay, just remember that in your mind. This is the 50% level of this entire move up. So that's why I said to me it felt a little heavy, and I kind of figured this might be a likely resistance area because of what I showed you there earlier. And, okay, it looked like we were sort of starting to roll over here. This is a little bit higher than this, but weak. Strong candle, indecisive candle, weak, weak, topping tail, okay, spinning top. Now we're going a little bit bigger red. So obviously, we know what the likelihoods are. Now, 33% is probably going to be somewhere in here. 50, 66% is going to be somewhere in here. Okay, but we know, I just figured up the math. Okay, let me make sure. I'll do it again. I'll just do it exactly. 28.95 minus 23.50 divided by 2. Yep, so 28.95 minus 36 is 28.59. Yep, so just below this level right here would be 50%. So just keep that in your mind. So you get a strong move, what typically happens, right? We're going to retrace 33, 50, or 66%, and then we also know the likelihoods. If we only retrace 33% and start to bounce, we might continue higher. If we get to 50%, which that's what you're going to get to the majority of the time, it can go either direction. And if you make it all the way to 66%, even if it bounces, you're still likely to continue on and possibly even test the origin of the move. All right. Okay, so I also said that I would talk some more about scalping. So let's just look. Let's just look here first, and then we'll start to switch time frames, and we'll also look at some other names, and I'll show you the kind of things to look for. I have to bring you back up on my comments. When I switch to my calculator, it unfortunately shuts my comments off with you guys. All right, so heading back up, looking at potential scalp opportunities. Okay, right here could have been one. So we came down, we went spinning top, we went inside candle. So you could have entered right here above the inside candle, or to be more conservative, you could have waited until this got taken out, and then you would have had, I would have been looking at an exit around the top of this wick. Okay, now as you can see, it actually went past it, came back to it, then moved higher. All right, so that would have been a potential scalp. 28.30, and I would have been looking to get out about the top of this wick. We're about 38, so about $8. That would have been good money. Okay, we're using a lot of the same price action rules that we always use, even when I'm scalping. I'm using a lot of the same things. You see that? Inside candle. Now, what I was really excited about here was a potential change of direction. Strong move down. We went spinning top. The very next candle went inside doji. Then we went green. When we took this out, I would have been looking at entering right up here. Okay, then you take it up. This would have been my take profit target, even though it went past. Okay, so then we come back up. You get up here around the 200. You would expect what? A potential pullback. Now, maybe, I don't think I would take this play. I know a lot of professional scalpers who love pullbacks, and they play a lot of them. Okay, so they might take that and expect we're going to put in some sort of structure and get a pullback. Okay, I wouldn't. However, what I would be looking at, let me just draw it in for you. I would be looking for that. Okay, once you see how these two both touched here, then you got your pullback, then it came back up. Breaking this right here, for me, would be a potential scalp. Now, my target, if I looked over here, would be somewhere up around the top of this candle. Okay, now look, if you look at my crosshairs across the screen there, it doesn't quite get there. So this is a perfect example. Here's your entry. You break this. Okay, wouldn't have had any worries about getting stopped out. But here, when it starts to go red and pulls back, okay, and maybe you get back to somewhere around here, I would probably exit. This would have been my take profit target up around here. And just look, we almost got there. So if I almost get to a target, and what did I say? Start to vacillate and then start to pull back, I'm out. I'm out. All right? Okay, so again, if you're somebody who likes to play pullbacks, there's a pullback, but then here's what I would be doing. Look at this. Okay, draw it right across there again. Okay, you get your pullback. Start to pop up, it breaks through here, you go, where's your take profit target? Okay, for me, probably up around the top of this wick, right over here, up near the top of it. Okay, so here, again, we would have almost made it here, pulled back, we wouldn't have come all the way back. Yeah, we would have right here. Okay, so let's see how close we got. That's pretty close. So again, up around here, if it started to pull back, I'd probably get out. Let's see what that would have gave us. 54 to about 59. So about $5. Okay, even on the pullback. See, that's still 59, 25, 59, right in there. Yeah, 54 to 59, that's $5. You're going to make money. Okay, then it pulled back and it bounced. Now, a guy that I know who is a big money player, I'm talking big, big. Okay, he, right here, he would be drawing a line right there, okay, and then saying, if we take this back out, I'm right back in. I'm not usually that aggressive myself, but I know that's how this guy plays, and look what he would have caught. Boom. Boom, big play, right? Maybe he knows more than me, right? Because this is what he does. And when I say he's big money, this guy, it's nothing for him to have 500 grand in one trade. In one trade, 500 grand. Nothing. I mean, that's like normal for him. 150 to 500 grand invested into a trade. That's not what he's risking, right? He's going to have stops, and his stops might be $1,500, $1,800, which that sounds like a lot of money to us. Okay, but if you've got 300, 400, 500 grand in the trade, $1,800 is nothing. But I know that he likes to do that. So if this like kind of goes against him right there, he just draws a line, and if it comes back through, he's in, and he would have caught that. You see that? He would have caught that pop. I'm not always that aggressive. Not always. Okay, but we come back up here. We pull back. Again, here's our pullback. So me personally, I would draw a line right across here. And look, we got a hammer. Now, if you're aggressive, you could enter right here. I like to be a little bit more sure. I'm conservative, and I know I'm probably giving up a couple of bucks. Okay, but look, when it takes it out, comes back, I probably wouldn't have got stopped out because my stop would probably be somewhere under this body here. pulls back just a little bit, so like a break, retest, and go. And this probably would have been my target right up here. So let's look. 28.70 to 28.77.25, but I would have exited slightly before. So let's just say $6.50. So there's another $6.50. Okay, look at this. Pull back. Okay, you're starting to get it, right? You're starting to get it. We get the pull back. You can do a couple of things here. You can either draw a line right here, or on the pullback if you get a trigger. If you get a trigger. Now after just 2 candles, I don't know if I would use a spinning top as a trigger, me personally. If it was a hammer, I would consider it. Okay, but a spinning top can be reversal. Okay, and there was a pop, pull back. Okay, again, you could either go up here or you could go right here off the top of this hammer, right here. There's a little pop. Let's see if that would have got anything. Top of this, 28.79, got up as high as 86.75. Again, goes up, starts to pull back. $4 or $5, yeah, you're gonna make some money on that. Pull back, okay? Right across here would be my line. Right across the top of here. And this is one that I'm sorry I missed. I was busy at the time. I think I was on my walk. Yes, I was on my walk. Okay, but draw a line right across there, get the pullback, break through there, there's your pop. This definitely would have been, because I was expecting to see a pullback here, right? I was expecting to see this, so that definitely would have been a target. This one would have been nice. 28.83 up to 95, so that's $12, so you probably catch at least $10 of that, $10 or $11. Okay, so that's how you do it, and it's the reverse on the way back down. It's absolutely the reverse on the way back down. Let me take these lines off my chart, or else people are going to know, or they're going to wonder what all these lines are. Then I have to explain to them, well, it's because of this. Okay, this stuff is for you guys. Give me 1 second here. Okay, and then before I switch to a different time frame, let's just see kind of what the action's doing over here. Okay, still red. Now we have broke. Okay, we didn't hold though. You see that? We actually finished above, but what's it look like we're doing? We don't know yet. It looks like a break, retest, and then if it can get below here, it may be a break, retest, and go. All right, but where does it need to get below? It needs to get below this wick. Hasn't been able to do it yet. Okay, but we're still looking. We're still looking to see, is it going to be able to break, retest, and go? All right, let's switch to a different time frame. Let's go to, let's do the 15-minute first. Okay, let's do the 15-minute first. And you know what? Let's just do this. Let's go to a different name. Let's just go to Apple. Let's just pick the next name. Okay, so here's Apple today, 15-minute time frame. Let's look and see, do we see any scalps that look good? Okay, nothing here. Nothing here. Nothing here. That's not an inside candle. Nothing there. Nothing here. Here would be my first one, right? Okay, so we had a pullback, hammer. Okay, so right across here. I'll draw it in just so you can see. Okay, right across here. Now this one would have been close. It came up, it rejected off the 20. It depends on where I put my stop. I could have potentially got stopped out. If I did, you can always re-enter on the same break. On the same break. Okay? My price, my take profit target would have been up, probably cutting this wick in half up here, so maybe about right there. So let's even say I did get stopped out. You could re-enter right here. And then boom, there it goes. And that would have hit it exactly. Exactly. So let's see, from here, this is on the 15-minute, remember. So 303.17 to 304.10, almost a buck. Almost a buck. This is on Apple. All right. Let's see, pullback. I don't see anything I like there. Nothing here. Inside candle. I might have been looking here. Although also see what time of the day it is. It's 1 o'clock. That's sort of in no man's land, right? That's the dead zone. Okay, you might be looking at trying to go long here. It would also depend on what the market was doing at that same exact time. But look, we just barely poked above and we formed a doji. Down. Is this inside? Let me see. I don't think it is. Actually, it's not. It's not. It's just barely not. Okay. Nothing, nothing, nothing. Okay, so really, on Apple, on the 15-minute, only one trade. What about if we go to the 5-minute on the same name? Let's go to the 5-minute on the same name. Does that change anything? It may or may not, right? So here's the 5-minute. Big up, big down, back up, down, nothing, nothing. Okay, I still don't see anything I like. Now, if this was a small doji, I probably would like try to enter below it, okay, because we would have had a strong move up and then started reversing. But see this long bottoming tail? I don't like that at all. Okay, so nothing. Now, here's what I'm talking about. If you get something more like this, okay, this could potentially be an entry. Let me just draw it across. Under that, right, excuse me, right here. Let me make it bigger. Okay, right here. Under this, you can look to go short. We would have got stopped out, okay, because it came back up here. Then I'm trying to be as real as possible because you would have got stopped out, but then you could have re-entered right here, and then look at this move to the downside. I probably would have had maybe this as a target or maybe even right here. Let's see, that's 303.40. And what's this up here? 303.87. That really would have only got you about not even 50 cents. So maybe a more realistic target would have been down here. I'm not getting in something like that for 50 cents. I'm not. Okay, if I think I can get a buck, yes. Yes. Okay, and it moved, right? Let's see how low it went before it started. 302, and what did we say this was? 303.87, I think is what we said it was. But let's just say 303.80 to 302, $1.80. That's the kind of move you're looking for. Okay, now let's do this. We reverse. I can take this one off. This was from the old chart. We're on the 5-minute now. Let me remove this one. Okay, we reversed here. This is bullish engulfing. I'm not a huge fan of bullish engulfing or bearish engulfing. That's just me, right? That's just me. I'm just telling you. I'm not a huge fan. I know a lot of people who like it, and they would be looking to go long on a break right here, okay? Right there would have been your break. You would have got stopped out. Then you would have broke again, and you would have got stopped out again. Then you would have got the pop up here. So you would have got stopped out twice for, let's see, not much. Nope, about 35, 40 cents. So again, obstacles, right? Looking for obstacles. You got the 20 right above you. And let me tell you another reason. And I'm not saying not to play them if you like them. If you like them, that's up to you. Okay, another reason I'm not a huge fan of bullish engulfing or bearish engulfing. Okay, look at this. That's a lot, right? Let's look at this candle. That's a $1 candle right here. Okay, that's $1. Now you're entering, and you've got obstacles here and here above you that's only going to give you 30 to 40 cents. Is it worth it? For me on Apple, it's not. Because I know, Apple, the ATR, I'm only guessing is probably $6 or $8 a day. I could look it up, but I'm fairly confident it's probably going to be something about there. So I'm not looking for 30 or 40 cents on Apple. $1, yes, I'll take $1, $1.50, a couple bucks on a scalp. That'll make you good money, but I don't want to put my money at risk over 30 or 40 cents. Okay, let's see here. Let's see, and we came back down. Okay, then we got this right here. I'd be a little bit nervous because of the 20. I don't know that this is a trade I would take. Yes, it's a move back down. Yes, it's a hammer. But because of this, and we just saw it reject right there, because remember, let's just be real, okay? In real time, this is what you would have seen. Okay, there's a rejection. Okay, then we get that. That's not really a hammer. Then we get the hammer. Okay, but we just saw this. Okay, I'm saying in real time, we just saw this after a pretty good move to the upside. Okay, and we're in between, you see this? The 20 and the 200. So we don't have any real clear direction right now. If we were above, then we would be leaning to go long. If we were below, we might be leaning to go short, but we're in between. So I don't know that that's one I would have taken. Let's go. Okay, now it did pop a little bit. I'm just being honest that I don't think I would have taken it. 303.25. Okay, 304. Let's just say 304.10. So that's 75. That's 85 cents. That's more like it. I just don't know if I would have took it. Then it still would have came up here. Okay, now we're talking over $1. It would have worked out, but I don't think I would have taken that trade. Okay, now spinning top. It looks like we're starting to move back down. We're looking at this in real time. Inside, so we went inside after the spinning top. Okay, but we didn't get any follow through, right? Didn't get any follow through. Is that one that I maybe would have looked at? Potentially, because that's a pretty decent move. Look at this, okay? Here to here. Then we go down. Okay, we would have went here first, but you see we're going down and we put an inside spinning top on an inside or on a spinning top. So taking this out, that one maybe. I mean, we are close to the 20. I maybe would wait and look for a bounce. Okay, we didn't go all the way back. Let's just go through a couple more. Okay, nothing, nothing. Okay, the only reason I don't like this is because you see we're just sort of flat here. We're just sort of flat. We're not really doing, it's not coming off of a sharp move up or down. We are at the 20, but so was this one, and you can see it didn't really give anything. Okay. Then we just get real choppy. You see how we're just moving right along the 20 here, and the 20 is almost flat? You don't want any part of that. Okay, bit of advice. When you see the 20 and you want the 20 move, if you're long, you want that thing moving up at about 40, 45 degrees. If you're short, you want that thing moving down 40 to 45 degrees. When you see it flat, look at this. Look at that. There's nothing to do there. There is nothing to do. All right, let's look at another name. Let's look at AMD, and let's just pick a random time frame. 10-minute. Just totally random. Okay, I'm just trying to show you, you can find plays on anything. All right, opening candle. This is the 10-minute. Now here is a scalper's rule. Let me get back. There we go. First time Thinkorswim's done that all day. It's only when I'm on with you guys. All right, scalper's rule. You get a decent size move to the downside, and look at this. Okay, we had tight moving averages, which means it's ready to pop. When you see the moving averages together, that is the building of energy, and typically at some point, it's going to pop one direction or the other. So you see how we entered here. We had a pretty strong move to the downside. We went through both of them, right? Okay, right here could be a potential entry. It's a little scalper's trick. Okay, we took them out, going to the downside. I'm not even worried about this pop-up because I'm only going to enter if it takes it out down here. And as you can see, it popped back up. No big deal because I'm not doing anything unless it comes back down here and takes us out. Comes back up, rejects, comes down. Here's your entry, and look at this drop. Boom. Okay, now here, I probably would have been getting out, somewhere down here. Definitely when I start to see green, because this all would have been red. This would have been red. Okay, so probably somewhere right around here is where I would have been exiting. 51.96 from 52.47. So about 50 cents. AMD, okay. I think AMD ATR is probably what? I'm guessing a few dollars a day. So maybe. Okay, that might be one that maybe works out for you. Okay, this is 10-minute chart. All right, now here we have a hammer. Again, I'm not going to know, or neither are you. Let's get back over here. Okay, you're not going to know what's coming next. All right, strong move down, then we hammer, look to enter right here. Now, we already know it's not going to work out. We get this initial pop. Now we're looking good. Where would my take profit target be? Probably back up around here somewhere. Okay, but watch what happens. We already know what's going to happen. Immediately goes against us and we're stopped out. Okay, my stop would have been somewhere just below this body. So as soon as it comes back through there, you're out. Okay, very little harm as long as you respect it. Okay, now here you see this coming down. I have no idea what's coming next, but I would probably have a line drawn across here just to see. Okay, I'm not going to draw it in. I'm just telling you that's what I would probably do. But we reject. There we break it. Okay, so I just said we'd have a line drawn somewhere right across here. Okay, now we break it. There's an entry. I have no idea what's even coming next. Okay, that's all the move we got. Not much. Okay, not always going to work out in your favor. Again, this is not my favorite time frame. I'm just showing that you can find plays in different areas. Went back up to the 200, started to reject away. Let's see, any entry? Here's an inside. Here's an inside candle after we rejected. You could potentially look to go short right there. Stop would probably be up right here above it, and you could catch a decent move. It's still playing out. Okay, so right there would have been a play. Okay, your stop would probably be up here because this is a small area. So 52.30, and it's been as low as 51.67. So just say 51 60 cent move to the downside already. Now, if this candle came back and got up about 50% in here, I'd probably look to exit, probably catch another 50-cent move. All right, but that's kind of how you do it. All right, let's go back and look at the market. Get back to our 30-minute. This is really weird. You notice how just now, my thinkorswim has started to kind of get glitchy. It's been fine all day. It was fine at the beginning of our live stream, and just now it's getting glitchy. All right, so we've been moving down. Okay, notice where we came. I told you this would be a potential obstacle, right? Opening price, let's get a little closer. Opening price. Okay, so here's where we rejected. So we've had 1, 2, 3, 4, 5, now 6 candles that would be considered negative candles. Even though this is indecisive, that's where the rejection was, right? If it was at the bottom going this way, we would count it as a positive candle. We would count it as a positive candle. All right, but we've had 1, 2, 3, 4, 5, 6 red in a row. Now it caught a little support right here. Is that real support? Or as we go into power hour, do we still have that potential to flush? Well, I would say yes, the potential is there. We don't know, right? This candle, we're going to have to see how it ends. It has a little bit less than 5 minutes. It could end as a hammer, right? And in that case, we'd be looking to see, okay, is it going to take it out and start back up? Or might we get a shooter and counter the hammer? I mean, you just don't know, right? We don't know yet. We don't know yet. But if it closes below the 20, to me, that's important. To me, that's an important thing. Only because 1, 2, 3 times today, it has acted as very strong support. Now we broke, came back and retested, and it looks like we're trying to go. That's what it looks like. It doesn't mean that's exactly what's going to happen. But to me, if it closes below here, that's important. And then we know that it's actually about $1.50 below this is the 50% retracement of the entire move that has occurred since right here. From there to there. Okay, from this support level to this resistance level up here, passing through 1, 2, 3 levels on the way up. Okay, that entire move, 50%. Remember the number 28.59. 28.59 is 50%. You can go ahead and do the math for 33 and 66%, but I just know they're going to, those numbers are somewhere in here. But 50% is at 28.59, and for me, okay, that could be a highly likely target because we know once a strong move or a chaotic candle occurs, typically 70-75% of the time, you're going to retrace back to around the 50% level. Okay, that's all I have for you guys today. We're just a few minutes short of 3 o'clock heading into power hour. I hope everybody has a great rest of the day. Let's kind of see how price action plays out. I know I'm excited to see how it plays out just because I love price action. I love to watch it and analyze it and anticipate, what it's going to do based on what it's telling us. One last thing before we go. I drew this in, I think it was about right here. I noticed that we were kind of doing this, and look how it played out until we got right up here. Then we broke below, came back above, and I'd already anticipated this was our rejection level, came back above, and now we're back on the bottom side of it. And especially if we take this out, well, then that really tells us that we're starting to move back down, right? Why? Because then we would be making a lower low. This was the last low right here before this high. See this? So that's what we'd be looking to see. Do we take this out? That would forecast or foreshadow more downside. How much? You don't know, right? You don't know. It could come down here, then bounce, maybe just put structure and go lower, or bounce and try to go higher. You don't know. But this is the last low before the last high. So this is what you would be looking to see if you could take it out for more downside. And right now, we've got less than 2 minutes to go, actually only about a minute to go. For me, I want to see this. Does it end above or below the 20? Above or below the 20? And if it is a hammer, okay, do we take it out, or does a shooter or some other kind of candle start to form that counters it? That's what I'll be looking for. Hopefully you guys will be looking for price action things yourselves and take some great trades. Be safe, right? Always be safe. Position size should be smaller than what you think, and just don't overdo it. Let your profits compound. Smaller profits piled up, make your account bigger, and then your position size starts to grow even though it's small. Remember, I told you guys, or I was telling Kelsey in the room. Okay, I know a guy who he's got well over $1 million in his trading account, and his goal every day is to try to make about $5,000 or $6,000 of profit a day. That's only 0.005 of a $1 million account. 0.005. Like, we're talking about, hey, if we can make 10%, if we can make 20%, blah, blah, blah. All right, he's only trying to make 0.005, and if he does that each day, that's $1.25 million per year with virtually no risk compared to the size of his account. So it's all relative. When you have a smaller account, you need to think about those kind of things. You need to think about those kind of things. Look what's happening on price. I see a couple of you guys already got off, but look what's happening. Let's see if it's going to try to flush it here. I'll hang out for just another minute or so. Let's see if it'll try to flush. Let me do this. I'm trying to make it so I can get more on the screen. There we go. There we go. Okay, this is the key right here. It's got to get below here. All right, guys. I won't make you guys watch this. We'll see you back in the room. Be safe, and we'll talk to you a little bit later. Bye-bye.